Hey, what's happening? What's going on, everybody? My name is Matt, in case you don't know who I am. Welcome to this channel where we talk about day trading futures. This is episode 2 of the free trading course. Today we're going to be talking about what are futures contracts and what are the micro and mini future contracts. So, what are futures from a broad perspective? Futures are two different types of things, actually. They can be a commodity or an index. Commodity is a physical good, so anything like oil, gold, silver. An index is a group of stocks that are all put together and put under an umbrella called an index, right? What I trade are actually the indexes. I trade the NASDAQ and the S&P 500. So the NASDAQ is the top 100 tech stocks all grouped together to form an index, right? And we trade all that grouping. So it's not like trading one specific stock. It's like trading 100 at the same time. The S&P 500 is the same situation, except it's the top 500 companies. So again, we're not just trading one company, we're trading all of them combined. So it's like a broader view of the market. We trade these on things called contracts. There's two different types of contracts that we're able to trade. One is the micro contract and one is the mini contract. So the micro contract is great for small accounts. It's also great for scaling in. And lastly, it's great for just less risky plays. The reason for this is because they are worth 1/10 of a mini contract. So the micro contract costs less money from a margin requirement. You only have to pay $50 intraday for one micro contract. The reason it's less risky is because I can enter one micro contract and the price movement is really only 1/10 of if I was to buy one mini contract. When you're looking at a chart, the ticker, which is the letters that on the top of your chart so that you can figure out which one you're looking at. So the NASDAQ, when you're on a chart, you'll type in NQ to find the NASDAQ, but if you want to find the micro NASDAQ, it will be the MNQ. So there are pros and cons to both. As we progress throughout this trading course, we will talk about risk management, and that's when we'll really dive into different plays of micros and minis. But the main idea is that there's two different types of contracts, micros and minis, and that the micro is worth 1/10 the amount of a mini contract. If this video is super helpful for you, make sure you smash the like button down below. You should also subscribe down below so that you can stay updated on when the next content for this course is coming out. I am streaming my trading and my strategies every morning at 8:30 Central Market Time, so make sure you come hang out for that, and I'll see you over there. Peace.